Steve Adubato. I'm about to introduce you to one of the great corporate leaders, corporate partners in the state of New Jersey. Bernie Flynn is the President and Chief Executive Officer of New Jersey Manufacturers Insurance Group. Good to see you, Bernie.
Good to see you, Steve.
100th anniversary of your organization.
Yes.
That's significant on so many levels.
It is significant. From humble beginnings, 1913, business leaders in the state of New Jersey formed us so that we could provide them with workers' compensation insurance, you know, a safety-conscious organization that they could trust.
Right.
And from there, 5 years into it, we started paying dividends back to those policyholders, businesses here in the state of New Jersey, and we've evolved into covering cars, you know, for both businesses and personal, and homeowners and umbrella. We
Taking
also
a look at an assessor way back in the day, right?
Back in the day
Way
is right.
before you got there.
Yeah, we even have a bank now, and we help our policyholders with flood insurance. So we've evolved quite a bit over these 100 years, and it's been an amazing ride.
You know, it's interesting. You and I have talked off camera as well as on, and you serve on the board of public media, and Jay, and you've been a corporate leader on so many levels. Involved a lot of New Jersey initiatives. You're a Jersey guy, and it's a Jersey company. Talk about that piece, because a lot of folks do business in New Jersey. Nothing against it, but they do business in New Jersey and are not New Jersey companies. What's the difference?
Well, it is important, I think, to have grown up here in the state. I mean, I met my wife at the Jersey Shore. I've been here, you know, for 52 years, and I love it. Family and friends are all here. But we consider ourselves New Jersey's insurance company.
New Jersey's insurance company.
It's in our name. And we have a great partnership with the New Jersey Business and Industry Association. Right. That's how we were started back in 1913. So we provide insurance for all the member companies of the NJBIA and their employees. And you know, at this stage, it's 21,000 member companies of the BIA who are eligible for our insurance, and more than 1 million employees throughout the state. And we actually have, over the years, almost 900,000 personal lines policyholders here in the state of New Jersey.
So it's so interesting. You know, people have different levels of commitment to the state and to the people of the state. So when Hurricane Sandy happens in the fall of 2012, people have all kinds of reactions, right? Yeah. You react a certain way, your company reacts a certain way. In an average year, your company has between 18 and 20,000 claims. Homeowner claims?
Homeowner claims.
To date, as we do this program, 54,000 Sandy-related claims, 45,000 homeowner claims, approximately 10,000 auto-related claims. How do you deal with that?
Well, you have to be prepared.
How do you prepare for that, Bernie?
We have a catastrophe response plan, and I will tell you, we are fortunate in that we had the opportunity to test our catastrophe response plan before Sandy hit. We had in 2010, in March, a nor'easter that hit North Jersey fairly hard. That was the most significant claim event in our history at that time. Then we had Irene last year, and the October snowstorm after Irene. So each time we went through a significant event, we refined the catastrophe response plan. After Irene, there were some technology improvements that we felt we could do to help us with a future storm. That storm was Sandy. So we activated our plan in advance of the storm, you know, hitting New Jersey. We ramped up from 39 homeowners adjusters for the typical year that you mentioned to over 400. We brought in 200 from outside the state of New Jersey through trusted partners that we had utilized with Irene. And then we took some of our own staff who had been trained or had previously gained experience in the homeowners line and brought them in, took them away from their current responsibilities, made them homeowners adjusters again, and it was a complete company-wide effort, but we planned for it. We also had 400 people on the telephones at different times taking claim calls. The Wednesday after Sandy hit,
right,
we were receiving in excess of 1,000 claim calls an hour.
1,000 an hour.
And we were able to pick up that phone and talk to our policyholders. That's what we do. We interact with them via the phone, via mail. We're a trusted partner. So that's the most important thing we do at the outset, you know, of the catastrophe event. Answer the phone, take their claim, and then immediately begin the claim fulfillment process.
But Bernie, obviously this is, you can prepare on so many levels, and then the level of devastation is, it's just beyond the expectation of so many. What will be some, from your point of view, some of the long-term impacts? I mean, you said you met your wife down the Jersey Shore, and you know the state so well. From an insurance perspective, do you think we really understand the totality of the long-term impact?
We're still evaluating that. So we'll be monitoring, our industry.
NJM.
NJM will be monitoring what
right.
goes on in the property casualty industry with other homeowners insurers. Sometimes the reaction after a storm like this for insurance companies is to pull back. I can tell you that we have never canceled or non-renewed a policyholder because of their geographic location, and we're not about to start. So we will be here for our policyholders for hopefully another 100 years. But insurance companies are in the business of managing risk. So Superstorm Sandy presents a new element, a new factor in that overall, evaluation of risk here in New Jersey.
Let's talk about risk. New Jersey, for years, had been in the press, media, for our reputation regarding auto insurance. You guys have...
That you know well.
Yeah, I know really well because of family history.
Yes.
My late Uncle Mike served as the chair of the state legislature and the assembly, the insurance committee. And he taught us a lot about it and argued a lot about it. And the state continues to have issues with it, but your company never walked away. Let me ask you, where are we today, in your opinion, Bernie, as someone who's dealt with this for a long time, in terms of the auto insurance marketplace, and what do we need to be concerned about?
We've done a complete 180. Prior to 2003, we had a dysfunctional environment. Companies were running away from this marketplace. People couldn't fleeing. They couldn't even get insurance, let alone, they were willing to pay anything. Couldn't even find it. We were available for those who were eligible for us. As you say, we were here through it all. But it was the McGreevey administration and the leadership in the legislature, bipartisan basis, that passed reforms that took the regulatory dysfunction out of the system.
Translate that in English.
Well, that essentially means that prior to 2003, if a company needed to raise rates because costs were increasing, they couldn't do it. Politically, it was unpalatable. Well, that means that when costs are going down, you don't cut your rates. So we were perpetually at a high rate that consumers were paying for auto insurance, and they complained about it, rightfully so. Well, the one thing that the legislature hadn't tried over those 30 years was, well, let's take the edge off this regulatory environment. Let's let the market dictate, where the prices ought to go. As it turned out, after 2003, and then later in 2004, GEICO comes into the state, we had a price war. Circumstances were right for that to happen, so all of a sudden, the industry, you see rates going down because the industry knew that they could, if necessary, raise their rates a bit, in the future.
Sure.
So competition became the best regulator of rates. And the consumers in the state of New Jersey were very well served. They could shop around, they could get a good deal on their auto insurance.
Today?
Today, costs are increasing. So, rates have risen. You can still shop around, great competitive marketplace, again, for the benefit of consumers. The problem today is twofold. The investment environment, fixed income investment returns, interest rates are so low. When they're that low, when we collect premium dollars, invest that money, the returns are 1%, 2% now. It used to be 4%, 5%, 6%. That affects how much people pay for their auto insurance. Also, medical cost inflation. It's a significant problem. This administration has done a good job of addressing that problem. We have a new personal injury protection, PIP, medical fee schedule that just went into place beginning of this year, and we'll see what kind of benefit that holds for the future. We have to monitor that.
Bernie Flynn, President and Chief Executive Officer of New Jersey Manufacturers Insurance Group. 100th anniversary. Congratulations, Bernie. And
thank you,
thank
Steve.
you for being a great corporate citizen. Appreciate it.
That.
One-on-One will continue right after this. Stay with us.
One-on-One with Steve Adubato has been a production of the Caucus Educational Corporation, celebrating 25 years of broadcast excellence. Funding for this edition of One-on-One with Steve Adubato has been provided by Investors Bank, the Russell Berry Foundation, Fedway Associates, Inc., New Jersey State Nurses Association, PSEG, committed to improving New Jersey's economy and strengthening its communities. New Jersey Manufacturers Insurance Group, auto insurance, homeowners insurance, and banking under the principle of stewardship. The law firm of Gibbons, P.C., and by St. Peter's University, the Jesuit University of New Jersey. Promotional support provided by the Star Ledger and NJ.com, Everything Jersey, and by NJ Biz, All Business, All New Jersey. Transportation provided by Airbrook Limousine, serving the metropolitan New York, New Jersey area. One-on-One with Steve Adubato has been produced in partnership with St. Joseph's Healthcare System.